I don't for a second believe that like we have some crazy advantage that a competitor couldn't figure out. So I don't see any rust for us.
Other than Ethereum, Solana is really the only community who's been through like this nuclear event and actually came through and survived. And so that's like an environment that you can't really replicate.
Cool. Welcome, guys. We are joined by Anatoly, who kind of doesn't really need any introductions, CEO and co-founder of Solana and Solana Labs. And we have Mert as well, CEO and founder of Helius. So welcome, guys.
Great to be here.
Thanks for having us.
Why don't we just quickly kick off with a question that's fairly relevant. Obviously, day of recording. We're recording on Thursday, but a big airdrop happened on Solana, the biggest one so far. And it seems like the network handled it fairly well. It seems like very comparable to some of the largest Ethereum airdrops, a lot of activity today on the chain, a lot of exchanges listing. Anatoly, maybe can you kick off and kind of talk through how the network has actually handled that?
Yeah, I think basically last year during Breakpoint, we were able to ship local fee markets, like V0 of it. There's been some iterations there, but basically the main pieces of design landed during last Breakpoint over a year ago. And over this year, there's been some incremental changes, but basically you've seen that design work, and it's shown itself to actually do a good job separating hotspots where there is like a super crazy event around like a particular token or an NFT launch, and the fees only for that particular thing go up. And not even fees for users, it is fees for opportunistic, super like economically incentivized like liquidation bots or trading bots and things like that, where there's a lot of like sophisticated, economically like incentivized actors that are all trying to be the first to access that piece of state. And the big difference, like why it works and why previously Solana wasn't able to handle this, is that because these like being first to liquidate or being first to like mint this NFT has such an economic incentive that before people literally spun up like thousands of bot servers that would submit 20, 30, 40 gigabits worth of traffic to every node trying to be first. And they would cause so much congestion and spam that it would block all the other traffic out, and like even to the point that they would impact consensus messages in the network and like cause an outage. So like localized fee markets are able to isolate those particular pieces of state such that if you're bidding, if you want access to that state, it's cheaper for you to like, first of all, you can't spam the network with infinite messages, and now it's actually cheaper for you to increase your fees and more likely that you'll get access to the state than sending a bunch of messages. So like it seems to work. It's not perfect. There's like a team of folks, both from Labs and Firedancer, all like looking at the data and trying to analyze this NP complete problem of perfectly packing blocks in real time and all this stuff. And like, but knock on wood, like the design actually works in practice. It's never going to be perfect because this is one of those intractable problems, but like it's awesome to see it working, because I think if it was impossible to get something like this to work, the whole thesis for one giant atomic state machine that can support multiple concurrent financial applications just wouldn't work.
And so after today's stress test, are you relatively confident that it's indicative of kind of the future stress test as well?
Yeah, there's definitely going to be like improvements, and like the DeFi teams all complain about specific ordering and stuff like that. They all want it to be better, and there's folks that are working to improve it. But I think in general, like things seem to be working. This was one of those kind of design holes, I would say, that we had early on when we launched, simply because no one has launched like a really multi-application blockchain before. I think we were really the first to go try to do this. And I don't think anyone else has encountered these problems before. So I'm glad that, we were able to solve them. But there's obviously like stability and reliability for the whole chain is more than just this. It's having, more than one implementation, having all the design and everything else, implement it correctly and stress test it across all different parts. I think from like my perspective, I feel like we're over the hump of proving that like everything that we believe should work is basically working. There could be bugs. We could need to go from not just Fire Dancer, but to 4 different clients and stuff like this. But like, from my perspective, it's all downhill, like at this point.
Cool. Mert, you've kind of become one of the most visible people on Twitter, kind of almost represent Solana community in my eyes. Do you think that the airdrop that happened today and the future ones, and just in general, the growth of the DeFi ecosystem and the financial ecosystem on Solana, is that indicative of kind of what was going on with Ethereum and kind of the compound airdrop when it happened? Is it just a start of something much larger? Are you anticipating this to kind of follow through and keep going and just be, you know, kind of the start of a huge growth of the ecosystem itself?
Yeah, so without giving financial advice, I do think this is certainly something that is the beginning of something kind of new. We call it DeFi 2.0 within the community in a sense. And like I look at it in terms of like layering. If you think of like the progress of the ecosystem as like an onion, there's always been kind of risk that we've been trying to like get rid of, like unrisk certain things. Totally mentioned like, okay, once we get over the hump of figuring out the spam problem, right? It's still not perfect. Like there's still some transactions that don't get included that should maybe. But the point is that the proof of concept works, and now we have to iterate and keep shipping to keep improving that. So the fundamentals work. It's just now a matter of engineering, right? Solana Labs, Fire Dancers scale the writes, and then teams like Helius and Triton scale the reads, and then it's like an ecosystem effort. Now, a meme that was like floating around during the, let's say during the dark ages of Solana was that, you know, Solana has no TVL. Right, which is like, okay, technically that's kind of true. Like it's relatively pretty low, but the reason wasn't because like it's a fundamentally broken chain. It's because the teams working on the chain hadn't released tokens, and like you don't want to rush releasing tokens, right? Because you want to make sure the tokens actually drive some sort of KPI or some sort of growth. You don't want to do it just for the sake of doing it for token season, which is I think a mistake that a lot of other ecosystems made. I'm not going to name any, but I think that was a mistake. And so now you have all these very strong teams like Jupiter, Meteora, Jito, Camino, Margin, Solend, etc., who built through the bear, right? They were here the whole time. They didn't just come for the network networking. They helped to make the network work better. And then now they figured out, okay, this really works. And we've identified our KPIs and our growth metrics and what to optimize for. Now let's get the community involved. Let's get some governance involved or whatever we're optimizing for. So I think there was certainly a lot of information asymmetry, and now it's being corrected.
I hope Solana kills the TVL meme. Like, I think, like, there is...
And by that you mean that like not actually paying attention to the metric itself, or you think that the TVL will go up?
There's absolutely no rational reason for you to have $1 more in TVL than is necessary to support the volume. It's just you're just actually risking.
I think that's right.
Risking capital, right? For
I think
no
that's
purpose.
right. But like, you know, when you look at it from the position of like researchers, and you know, we have 30 researchers at the block, you kind of need to look at comparable metrics across different things to be able to put things in perspective. So I also think TVL is a shitty metric, and I think like in some ways I wish it died as well. But also when you look at it, like how would you compare in different ways across multiple different protocols and how much activity there actually is? Because especially in blockchains, and we've seen this across multiple chains, like people fake the shit out of stuff. You know, transactions, volume in general can be faked as well. TVL, at least to me, while it's imperfect, at least it's difficult to like fake, you know, the amount of money that you have on a certain platform. So I agree with you, but at this, you know, at the same time,
I mean,
what's the better metric that researchers should be using?
Yeah, this is the hard part. You guys are the researchers, so you need to like go try to figure out what is actual economic activity and what capital is actually at risk to support it. And it's a really, really tough problem, right? Because like even TVL can be like faked. You have high FTV tokens that are like sitting in some protocol that are doing nothing, right? providing zero
Yeah.
risk, right? Like, so yeah, it's tough, but like if you compare like the real financial system, the traditional financial system, people don't like have arbitrary capital at risk. It's actually very small amount of capital generate a ton of the volumes. If you talk to like the big trading firms,
Right.
they don't have like they literally will like trade every market with very small amount of capital all at the same time because
Yeah.
how integrated they are between all the brokerages and everything else. And like my personal belief is that like for DeFi to succeed in the real world, it's got to be cheaper and faster and more transparent. And like we have to.
And
Like, so
if there was one metric that you liked that kind of shows the level of success that Solana has had, which one would it be?
this one's tough because none of them are like breakouts. I'm like stuff that looks
Yeah.
promising to me. I would say is like seeing priority fees start to match, like start to be more than 50% of the fees in the network. To me, is like a real thing, and that's like I think Ethereum's strongest selling point is that you can look at the L1 and you can see that the economic opportunity of the state on chain is generating so much demand that the burn is high. Like the ultrasound money meme is dumb, but the fee revenue is not dumb. That is actual like that's the hardest thing to fake. Somebody really had to give up, an arm and a leg to access that state. So that is like seeing priority fees increase for the right reasons because there's economic reason to access state and people are bidding for it. That to me seems promising. If I could trust the volumes on chain, that is really promising. Seeing volumes flip TVL means that like we're seeing capital efficiency from faster, lower fees and like faster finality should like kind of make this whole system much closer to the efficiency that you see in traditional finance. But again, like you said, like you have to really analyze and see, are these volumes real? Or is this like actual capital that's at risk between different, counterparties and stuff?
Yeah, and so there has been this like almost meme or whatever you want to call it of only possible in Solana, right? Like things that you wouldn't be able to do in on Ethereum on layer twos. Maybe Mert, you can jump in and like talk about some applications that you think are going to be like absolute kind of so different and separated from what currently could exist on other chains that it's going to be a super big competitive advantage.
Yeah. So actually, fun fact about that story is I was doing a demo with the Get Code team. They now do microtransactions, which I would say relatively are only possible on Solana to begin with. And due to low fees and predictable, how predictable the fees are. And they showed me the demo and I was like, wow, that's like super fast and smooth. That's like only possible on Solana. And then those guys also said it. They're like, okay, yeah, that is only possible on Solana. And then the community was like, okay, let's just keep spamming this. And that's kind of how that happened. So, and the thought process behind it is like, Solana enables like a much broader design space that you don't want to just copy apps from the EVM and make them like slightly better. You want to just build things that can't be like vampire attacked and go to other chains, right? That was kind of the thought behind there. And in terms of, okay, what fits that bill? So compression is a really good example. So the way Solana works, the way the programming model works is storage is relatively more expensive than compute. And you can actually use cryptography like Merkle trees and kind of basically trade state space for ledger space. And then that allows you to mint very large numbers of digital assets, for example, for cheap. So like 1 million or 2 million NFTs for like $100. And for example, that's why Render, or one of the reasons why Render Network is migrating over to Solana. Helium migrated from their own L1 to Solana because they literally couldn't do the same use cases on their own blockchain, right? Because it wasn't possible there or anywhere else. So compression is a really good example. And like there's another app called like Drip. Before kind of the meme about NFTs was like, it comes from a mindset of scarcity, right? There's like 10,000 of them and you must rush to get, the rares. But then now with compression, the mindset is kind of shifted. You kind of have a mindset of abundance and accessibility, and you can treat like NFTs as like content in a sense and just blast them on chain. So compression is a really good one. I think like order books, still I still think the best order books are on Solana. I think other chains are, like Monad and stuff are trying to also support them now as well, and we'll see what they come up with. But currently they're already functional on Solana. And then, the local fee market stuff is actually pretty interesting because it means you have consistent fees or predictable fees for the state that you're touching. And that's super important for like global payments, right? Like if I'm making global payments and I'm sending money to my dad, but there's a JPEG mint going on, I don't want that to affect me. And currently it would basically anywhere else but other than Solana. And then, the other part of this is more of like a community angle, which is to say that other than Ethereum, Solana is really the only community who's been through like this nuclear event, right? Ethereum had like a DAO hack, Solana had like the FTX stuff, and actually came through and survived. And so that's like an environment that you can't really replicate, right? Like what that does is it like throws away the tourists and then, bonds together everybody who's in the community closer. And then you just can't replicate that again. And then they have like just that the community can't be bought, I guess is what I'm trying to say.
The non-believers have been purged.
But aren't a lot of them coming back now that the price is higher again? I feel like it's always the same. Like, of course, it's a tougher community now. It has gone through a really tough time, but like there's so many tourists now that I see in the Solana ecosystem again. It's like it's always a magnet when things do well. It's always a magnet for the tourists. It seems like to me at least.
I think what's really weird is like seeing that DeFi 2.0 is actually quite different on Solana than Ethereum. You're starting to see like, I think like the first, like last year during the last cycle, it was basically copy and paste protocols from Ethereum. But now stuff that's successful is uniquely built on Solana. So Jupiter is like, you can say it's the same as 1inch, but because of like asynchronous communication between L2s and the expensive gas fees, 1inch just can't work just like Jupiter can. Right, like Jupiter is really cool because they atomically route between arbitrary number of markets and pull liquidity from the entire state machine, and that is like uniquely the whole magic premise, right, of Solana is that like everyone's connected in one world computer. That's one chunk of RAM, right? That's globally replicated. Jupiter is actually like that one application that shows that, and it's a super successful application. It both in terms of product market fit and like utilizing that like what's uniquely possible on Solana. And you're seeing that happen. And also I think what's really interesting is like Jito, it's kind of like combination of Flashbots and Lido, which is also like different. It's not a copy paste from Ethereum in any way. It's from the ground up created based on the nuance of like fast rotating block producers and kind of like the way the staking system works on Solana with like programmatic delegation and stuff like that. So we're seeing like very like stuff that like we did to optimize the chain is now creating separate applications that are like taking advantage of that are not in any way copies from anything that's on Ethereum, even though there is like feature overlap, right? Like Jupiter is competing for the same kind of retail that would use 1inch or Uniswap or whatever, but like totally different design from the ground up.
I have a quick question for you to follow up on that. So you recently said that, Ethereum is like Windows 95, Solana is Windows 2000. What if there's Windows XP at some point and it's not Solana? What if teams keep
XP is based on the NT kernel. It was just an incremental difference, but there was a very large difference between the single-threaded kernels built for single CPU machines to the multi-core systems. That was like massive undertaking both on Linux and Windows. And this is like this iteration that we're doing. Monad, Sui, Aptos, a bunch of people are like also have that thesis. We should have a single chain that can run multiple applications. They're all going to go through the same pain points, but it's not going to be that jump. You only do it once and then you have incremental improvements. We're now like, we're all going to be fighting for market share. We're all going to be competing, right? Who the hell knows which one is better? I know which one is better, but like it's gonna be up to the gods, right, to like figure that out.
So why do you think something like Aptos or Sui, despite like all the hype, all the massive raises, why do you think they haven't succeeded so far? At least is it just like going through the initial phases, the struggle, the adoption, the community? Like what is it specifically that Solana was able to capture that these chains are not so far?
Building an ecosystem is a multi-cycle process, and it is a really, really hard process because a lot of the initial kind of like gut things that you want to do, like poach teams from other places, are actually detrimental to your own ecosystem. Like this is something that like, because of how difficult it is to program on Solana, it was a weird advantage. It's so we could not poach any Ethereum teams. So the only teams that would build on Solana were like the crazy people that like got it. And this is what you need. You need to like build effectively. It's like building a social network. You need new content. You cannot like poach Twitter to a Twitter clone. You actually need to build TikTok, which is based around whole new content, whole new distribution model. So this is like the really, really tough part that every ecosystem faces. And it's been a struggle for Cosmos, I would say, like even though they were at it longer than Solana and they have their own unique programming model and whatever that stickiness that's created is like hard to replicate and unknown. But I don't for a second believe that like we have some crazy advantage that a competitor couldn't figure out. So we can't like, take a break. No, I don't see any rest for us in the near term.
And do you think like long term it's literally just about like improving constantly, or do you eventually hit a kind of a point where it's just about community adoption, budget, marketing, all of that?
I honestly think that there is no point where you cannot improve, because both bandwidth and compute, like the amount of cores per dollar that you can put in a box is going to double every 2 years, unless like we hit terminal civilization and we should all be working on bunker coin. So I'm a techno optimist. I think that over the next 20 years, we're going to see the same 1,000,000x improvement that we saw over the previous 20 years. So in my mind, like I can see at least that far into the future and believe it, that we will see these continuous improvements over the next 20 years. Now, that doesn't mean that like, what's hard to understand is that like it's possible that we hit like actually saturation for demand for block space. Like Google does about 50,000 searches per second. That's a web scale company that's been around forever. It has 100% market share effectively for like the most important internet use case. And that's only 50,000 events per second. If you told me that like you need a blockchain that does more transactions per second than Google does searches per second, and this is what you're designing for right now, I'd be like, dude, we haven't even gotten product market fit for like anything yet. Like, so if like crypto succeeds at that global scale and all we need is 50,000 TPS, you can do that already on like basically Solana's design with like slightly better hardware, right? Like it's not even like crazy super, stuff that's coming out in 10 years. It's literally today's hardware, like the high-end boxes.
And that's just, those are reads too, right? Searches.
Yeah.
So like reads are like basically infinitely scalable in a sense because it's a Web 2 problem, but writes are the major thing that Toly and team are optimizing for. I do want to touch on the Sui and Aptos thing that you mentioned, Larry. Mm-hmm. That's kind of what I was alluding to when I said, actually, probably the more important part of only possible on Solana is the community and ecosystem aspect, which is to say that those ecosystems have to kind of prove that they can withstand battle testing over some very, very dark moments, right? And that they have something to prove in a sense. I don't think like the tech over, I don't know, a 15-year time horizon is going to be meaningfully different between blockchains, right? Like Vitalik says it's an end game, right? Maybe block production is a bit more beefier machines, validation is a bit lighter machines, right? End game is relatively similar. And so distribution, community, values, et cetera, that I think makes a big difference. Like at the end of the day, I think of it as like a community computer, right? Like it's a computer ran by the community. Social consensus matters, as you're seeing with Ethereum today. And so I don't think many people agree with that actually, but that's my take.
I think you'll see like a gulf in terms of what's possible on single atomic state machines versus asynchronous systems. I think that's going to be like two different sets of applications. They will have like feature overlap, but I think they'll be like quite differently designed.
Yep.
And we'll see which one wins, right? Like, but you know,
Both of you guys have been kind of shit talking layer twos since I've both been following you. I personally think that like a lot of the advantages that you guys are mentioning about Solana, like for example, a Starknet, I think is like fairly similar in some ways. You know, kind of new programming language, non-EVM. You know, building from scratch, no community at first, but having some kind of grassroots developers already. What specifically do you guys not like about that approach? Specifically Starknet, but even other layer twos outside of like, let's say, liquidity fragmentation and ease of use? Like, is there more that just like technologically doesn't make sense to you guys?
It's what I don't like about layer twos is that it's just marketing. Like if all you're talking about is securing settlement from Ethereum to another environment, you're building a data validating bridge, and then you're making it immutable so there is no multi-sig that can override those those security things. And no one is like focusing on that. People are focusing on, I'm going to do a layer 2, and then it's like the be honest meme. Be honest.
But the end state is supposed to be, right? Like, I mean, ultimately, I think there are some reasons why you would want to start with like something, you know, the
Solana is Ethereum layer 2 via the wormhole eigenlayer. Right now we're in this like marketing stage, and what I'm really annoyed is that like it's, I don't know, I'm trying to tell people, look, the emperor has no clothes, right? There is an emergency upgrade multi-sig.
Right.
9 out of 10 of the L2s don't actually sync data to the L1. The fraud proofs either are not implemented or have a whitelist of who can submit them. So like based on those definitions, Solana is an L2 via the wormhole eigenlayer. It's the best L2.
I can I have some takes on this as well, if you haven't noticed. So okay, like I actually don't mind L2s. Like I'm kind of fine with them, especially SVM L2s. I think make a lot of sense in some cases that don't require global state. But what I don't like is more so the Twitter representation of L2s. So I guess totally called it marketing. I'll call it the Twitter representation. Because like people will use the eventual end state of L2s where like after like a 15-year period, you have decentralized sequencers with expanded DA and no multi-sigs and escape hashes built in, based rollups and all this stuff. And the EVM isn't single-threaded, or you're using rollups that aren't EVM. Like all these conditionals, you're multiplying them, and then you're making your argument for that. But then you're not applying the same time horizon to Solana, and you're saying, well, Solana right now has bad hardware requirements. It's like, okay, but why aren't you applying that same 15-year time horizon with conditionals to Solana as well? It just feels a little dishonest to me. I think, you know, obviously it's also a problem that most of them, with the exception of like Arbitrum, who has proofs, but they're restricted to whitelisted actors, with the exception of that, like most of them aren't really L2s in a sense, not yet at least. And sure they will be, but you know, Solana will also get better over time, right? So will hardware, which is a much more proven bet in the history.
And like,
so that's how I think about it.
Like there would be if the Ethereum, I'm actually pretty bullish on dank sharding and like that technology roadmap. If it actually succeeds and they have put their hyperscale hat on and push through it, there's absolutely nothing that me as a Solana protocol dev could do to stop somebody from taking all the Solana data, putting it into Ethereum through dank sharding, and creating the data validating bridge and making Solana and Ethereum L2. They can do that without changes to Solana itself. So like L2 is really just a marketing meme for an eventual data validating bridge. Great. Solana's gonna be, like, who cares?
What about, I know Toly, you and I talked about this before, but what about layer 2s on Solana at some point? Like if it is the endpoint, if it is kind of the winning settlement layer eventually, do L2s ever make sense in Solana?
The reason why you can raise money for an L2 is because you can show that Ethereum makes X dollars per day from fees, and that you can charge somewhere between that and what Solana charges. And so you can basically say, hey, we're in an environment, it's more expensive than Solana, but cheaper than the Ethereum L1, and therefore we can rake this middleman fee. I think you can't make that argument in Solana, because what are you going to do? You're going to build an L2, it'll be like as expensive as the Solana L1. Like it's kind of useless. So like
yeah, but at the same time, I mean, just to play the devil's advocate, like you could, the reason why so many layer 1s raised 2 or 3 years ago was just because like let's chase Ethereum, right? It was like the same thing. It's like it's just valuation comparisons and all of that. And there was so many layer 1s that raised that haven't done anything, and the only reason for that is because the valuations like kind of overpower everything else. You look at like top 20 coins right now, 18 of them are layer 1s. It's like pretty crazy, right? So like I personally think that's probably the main reason, where like the reason why so many layer 2s get funded is because you're speculating that eventually that's going to capture a lot of value just purely based on some of the comparison metrics.
But how can it capture value if...
I don't think it will. I'm just saying, like, that's the reason why it raises money. Like, if someone offers me a C check for a layer 1 and layer 2, like, I'd probably take both, because I will know that it's going to return at 50x or something with no effort whatsoever.
But you still have to have some thesis that, like, the layer 2 will make money, and if the layer 1 that
I don't
it's
think
based
so.
on...
I mean, in crypto you don't, right? A lot of investors are like purely like, let's just make money, and that's just how it is. And I think that's one of the core issues with crypto in general. Is like you make so much money prior to actual any validation of the use case itself.
I think the reason why it'd be harder in Solana is because at least you would have a really hard time getting any kind of traction or adoption, because the developer community is going to be like, why would I like use this layer 2 if the L1 is already cheap and fast? Like there is at least nothing, there's nothing to sell, right? It's not a product that you can sell to anyone, right? So I think at least the technical hurdle is so high that people that are like able to do that at least are going to Ethereum because they have a practical chance of getting some traction. But like that's the main difference. Like there's tricks you can do with like the Solana state machine and durable nonces and stuff to give you like L2 like, and like basically like light protocol programs that use a Poseidon hash to do compression. That's an L2, right? Nobody talks about it because it's hyper optimized single program that's an L2 on Solana that does the whole ZKP thing. It all works. And if the transaction sizes were a little bigger, you can actually atomically compose between all of them in one transaction. It's like not a competitive advantage for a developer right now to go deploy something there if the L1 provides them cheap and fast enough transactions, right? Like it's got to actually be like compelling for some reason.
Yeah.
That being said, I think Solana, the L1 doesn't need L2s, but I think L2s probably need kind of Solana or the SVM more specifically, right? I think, I don't know, what I've seen so far is like a bunch of EVM rollups, which is fine, but like I think the SVM rollups are they just make much more sense. And the way I think about it is like, and people get mad at me on Solana about this, but L2s are going to happen regardless of what anybody wants to believe. They're going to happen. And so why not use the best possible open source software, which currently I think that's the SVM for execution.
Makes sense.
I'm more worried about a competitor with one L2 than with and L2s. Tezos is like, I think, slowly doing the right kind of development. But for some reason isn't able to get like a ton of developer adoption.
So we're kind of nearing the end, so I have a couple of closing questions. One fun one, the other one more so kind of on the roadmap and stuff. So the first one, Mert, we can start with you. What's your favorite layer 1 outside of Solana? What's your favorite layer 2?
Oh, man. L1. So, okay, one that hasn't launched is going to be Monad. Otherwise, I'm just going to go with Cosmos and that whole ecosystem. It's kind of like the counter opposite of Solana, which is why I kind of like it, because it's very interesting to play those different design spaces. L2, that's actually, I was actually thinking about this yesterday. I actually like two. One is going to be Eclipse because it uses the SVM. And then two is going to be Aztec, which is like a privacy-focused L2. Yep. And I was talking to them, and they have like pretty reasonable plans towards like pure decentralization, burning the multi-sig, and I think they at least thinking about the right problems.
I agree. I think the biggest issue with Aztec is that we've seen time and time again that it's really fucking hard to do privacy if you're a team that is like doxxed or known, because you will be targeted. That's my biggest problem. Otherwise, I love it as well. I think it's a great project. Totally, your answer?
I'm always a huge fan of Cosmos, but honestly, Ethereum, because of the R&D community, I think is like awesome. Donkrat has been like folks that I know that are working on Ethereum R&D have been like, they would like answer texts from me on Telegram and be like, how'd you guys build this? And they're just like, this is exactly what we did. They're super awesome people, like really trying to build really good open source software. So like, despite competing and arguing about it on Twitter, it's an awesome community. Out of L2s, Scroll.
That's going to be a nice Twitter clip, just like you saying for like 5 seconds.
Scroll, I would say Scroll. Scroll's my favorite Ethereum L2. Cool. I like Togrel. We argue on the internet. He's smart, I think, and has a ton of conviction and wants to do the right thing and is always like, I think, calling out bullshit. So I think it's a really good team.
Cool. So the last question for both of you, if you can talk about the roadmap for both of your firms just over the next like 6 months and what you're the most excited about, and we can close with that. Mert, if you can kick off.
Sure, yeah. So we already alluded to this, but like basically Solana Labs helps the writes be faster on Solana, whereas like companies like Helius help the reads. A very common thing in software is like, if you have a very performant system, like or like a language like Rust or C, it's generally hard to write. But then if you have like something that's very easy to write, like a Rust or a Python or Ruby or something like that, it's generally not performant. And it's not a perfect analogy, but that's kind of how I think about Solana, which is that it's the most performant thing out there, but it's not the easiest to develop on just yet. We've made a lot of upgrades since last year in the developer experience, but basically the entire mission of Helius, which is my company, is to help improve the developer experience for anybody who wants to build on a giant global state machine like Solana. And so we'll be focusing a ton on that, APIs, better RPCs. Totally keeps asking me for generalized compression. We'll do that, better smart contract tooling, etc.
Cool. Totally.
Probably like my biggest priority from the protocol side is making sure the Firedancer guys are unblocked and ship as fast as possible, because getting 2 clients is just such a massive improvement to safety. So that once that's out, it'll be like a huge difference, I think, in terms of how many single points of failure exist in the network. We go from the code base to 2 is just awesome. Beyond that, like, I think I always publish like, I wish this was done and stuff. It's just a bunch of incremental improvements. I think, especially with Firedancer, there will be a clear demonstration that the only thing that you need to do to make Solana go faster is just to add cores. And this is my end game, is that like once we're there, like once it's very obvious that somebody can go click a button on Amazon and get a bigger box and the network goes faster, we're done. We're kind of like, I think should almost start thinking about like ossifying like components and pieces and making sure that like things get like, you know, like simpler for folks like Mert to go do whatever, but the protocol actually stable and doesn't change much.
Cool. Well, appreciate you guys' time. This has been super insightful and super helpful. Hopefully we can do it at some point again. So Mert and Anatoly, thanks so much.
For sure.
Thanks for having us.
So we're now joined by Rebecca, our data researcher, and we're going to be talking about some of the data-driven metrics when it comes to Solana, and then kind of put it in the context of things of what we just talked with Anatoly and Mert. So welcome, Rebecca.
Hi, thanks for having me.
So why don't we just start by looking at a very simple metric, and that's price performance. Bitcoin and Ethereum have done very well over the last few months. How has Solana compared to Bitcoin, Ethereum, and other assets?
Yeah, so obviously Solana has really had a very strong performance in recent months. It's definitely outperformed both Bitcoin and Ethereum and most of the crypto market. As of December 1st, Solana was up almost 500% year to date versus 128% for Bitcoin and about 71% for Ethereum. Solana started the year under $10 and has flown all the way up to over $65. So it's no secret that they've had just a crazy performance. But while it has been on a tear, its market cap is still really much below both Bitcoin and Ethereum and some other larger cryptos, although I think it's still in the top 10. But in terms of the ratio, the ratios of market caps, the ratio of Ether's market cap to Solana's market cap has dropped from about 24 in September to below 9 last month. So it really showed a steep decrease in Q4 of this year. But while there's no flippening, obviously there's still a 9-fold gap between them. The difference between Ethereum and Solana did shrink a lot faster than Bitcoin or between the ratio of Bitcoin's market cap and Ethereum's, which has stayed pretty stagnant through the year as both of them have put up pretty similar gains, even though Bitcoin has had a little bit of an has a bit of an outperformance relative to Bitcoin. But Solana still has a while to go before any big flippening happens. But the recent rally has strongly been in Solana's favor.
That makes sense. So Anatoly and I talk a little bit about kind of what metrics he's excited about on Solana. We talked about TVL a bit. What are some metrics, when looking at Solana in terms of activity that you can tell us about, and how have they actually performed, recently?
So one thing that you can just look at as a proxy for network activity is definitely just baseline transactions. For Solana, it's usually good to look at non-vote transactions, since there are a lot of vote transactions on the network, and you can just look at ones that are not participating in voting. But the 7-day moving average of successful non-vote transactions has been rising since it hit a relative low at the end of September. In the 3-month period from September 1st to December 1st, the moving average grew over 30% to reach 21 million. But transactions are still a lot lower than they were in the peak of the bull market. But the recent growth has been pretty sustained. We've seen it been growing essentially for the past 3 months. Whereas on Ethereum, transactions have actually been pretty stagnant. But transactions on Ethereum in a raw number form are much lower than on Solana, but it's not really fair to compare apples to apples on the numbers because the sizes of the transactions are different. But looking at relative growth in the number of transactions, Solana has definitely seen a little bit more growth in the transactions area.
That makes sense. And what about users or wallets specifically? How has Solana compared to Ethereum recently?
Yeah, so 2 ways to track users incoming to the network are active addresses and also new addresses. So the number of active addresses on Solana has also, much like a transactions, been on an upward trend since September. And the 7-day moving average climbed to over 450,000 and briefly overtook the number of active addresses on Ethereum, which is not an uncommon occurrence. Well, it's not historically uncommon, but it is uncommon in 2023 for that to have happened. And then also similar to transactions. While the number has risen, it's like not as high as the number of active addresses on Solana back in the bull market of 2021. And then new addresses seem to have been on like an even stronger tear than active addresses, like coming in over like 200,000 a day. And then for both like new addresses and active addresses, they seem to have peaked in November, but both are staying pretty elevated in recent, like coming into December.
Cool. That makes sense. And what about like some of the economic activity that's happening on actual chains? Like Toly and Mert talk about that a bit. Like we need to look at like actual value moving on the chain itself. How has Solana done there?
Yeah, so just looking at like something we can compare is like the value of the native token moved on chain. So looking at how like the value of SOL has moved on chain, across the $6 billion threshold for the first time in about a year, like last month. And similar to like the number of active addresses, the 7-day moving average of the value of SOL moved on Solana surpassed the value of ETH moving on Ethereum last month, and that's like still holding true. But it does look like the volume moved on chain has peaked and is coming down a lot faster than the address metrics have. But one thing to note is like when you're looking at the value of SOL moved on chain, and the fact that it's overtaken Ethereum is like also the fact that SOL's price has risen quicker than Ethereum's has. So seeing this growth, you do have to keep in mind that like Solana's price has risen quicker, and that is contributing to why it's rising so fast. But since we've seen more transactions and more addresses, it's like also probably likely more people are just using the network to send Solana.
And so if we could somehow separate from the price increase itself, maybe stablecoins is a good proxy where, you know, you're just moving kind of dollars on the chain itself, and Ethereum and even Tron, they're still super superior to Solana when it comes to like actual number of stablecoins on the chain itself. What are some of the trends that we're seeing on chain with Solana and then some of the stablecoin transfers?
Yeah, so looking at stablecoin volumes, like specifically USDC and USDT volumes on Solana, USDC has seen a pretty significant uptick in activity. Like the volume of USDC on Solana has climbed tenfold from October 15th to November 15th. And the 7-day moving average of USDC on Solana actually like peaked at around 4 billion back in November. And that like what was surprising mostly is that the volumes were actually pretty comparable to where they were on Ethereum, like the same order of magnitude, even though like there's way less USDC on Solana than there is on Ethereum. It's not the same case for USDT. Volumes are only in like the couple $100 million a day for USDT, and is like way below Ethereum, where like billions is being done a day. But there has been a little bit of growth there. But either way, like it just shows that, especially on the USDC side, that the fact that volumes are climbing so high is that like there's been more adoption for USDC on the network, and that also there's just been more usage of the network to send stablecoins. And even though USDC volumes peaked in November, they've been like coming down a bit like many other metrics. Volumes for USDC and Ethereum have also been dropping this month as well.
Cool. So obviously with a lot of the new tokens and airdrops, like we were talking about in the interview, one would assume that the DEX volumes and in general kind of DeFi activity would be going up a lot. It's the first time really that there are tokens, especially as desirable as the ones that have been launching. Can you validate that from the data in terms of like increased activity of DEXs?
Yeah, so like DeFi activity on Solana has definitely picked up, and that's like consistent with everything we've been seeing, like more transactions, more addresses, more economic throughput. Like usually that's a sign that DeFi activity has been picking up. And like you mentioned, a lot of airdrop hype. There was like Jupiter, Jitto, and then like Pith Network also launched their token on Solana, although you didn't necessarily have to transact on Solana to earn that airdrop. The token was still native there though. But like we can look at decentralized exchanges as a proxy for like broader DeFi enthusiasm. And we've definitely been seeing Solana emerge as a more dominant trading chain. Like even though Solana doesn't have like some of the big name DEXs like Uniswap, even though like you do have like certain ways to like navigate EVM compatibility with Solana, not a lot of DEXs have moved over. But like Whirlpool, which is like a newer automated market maker from Orca, has been gaining a lot of traction. And also like Radium, which is one of the like more original Solana DEXs, has also been faring pretty well. And like together, they've just been like across all Solana DEXs have been putting up a lot more volume. So like weekly DEX volumes on Solana like hit a peak in November of around $2.14 billion, which was still a lot less than the $10 billion in volume on DEXs on Ethereum. And it also didn't even mark a historical all-time high. Like volumes almost hit a high back in the bull market of 2021. But it still marked a new high for the ratio of Solana DEX volume to Ethereum DEX volume. It reached about 20% that week. So like while a lot of these metrics we've said have like been rising but haven't really hit a peak or like still remain pretty low, like Solana's DEX momentum seems to be like quite like high for like all time. But then again, like similar to the caveat about like native token volume, like for many DEXs, like the highest volume pairs tend to be in the native token. So like for like Whirlpool, like you'll see like Sol USDC is the highest volume pair versus like on Uniswap, it'll be like ETH USDT or whatever. So like again, like DEX volumes rising like at a quicker rate than Ethereum is also partially due to price. But then like again, it does seem like activity just seems to be like organically rising anyway.
That makes sense. And so one of the frequently cited advantages of Solana obviously is super low transaction fees. It's also one of the things that are often cited by Ethereum supporters that that's actually not that good. It's so cheap because it's creating opportunities for spam and other things. How have fees looked and developed over the last few months? Like, are they rising up? And in terms of like comparing them to Ethereum, how much cheaper they are?
Yeah, so on both Ethereum and Solana, like there's definitely been an increase in demand for block space. Like people are just engaging more on these blockchains, like which just makes sense as prices rise as well, which in turn has pushed up fees on both network. And the average transaction fee for a non-vote transaction on Solana has actually picked up faster than on Ethereum. But since it's so cheap to transact on Solana, like users might not actually be feeling that. Like in dollar terms, prices just rose from like a fraction of a cent to a slightly larger fraction of a cent, which is like really not that much, especially if you're transacting large amounts. Whereas like on Ethereum, it's like risen by a couple dollars, which like even though it's rising at a slower rate, just like feels a lot worse. So while both networks have seen fees rise, like it feel like the fees rising on Ethereum just feels a lot more aggressive due to the fact that fees are higher on the network. But like obviously Solana was built to be cheaper and faster than Ethereum. So it's like really not surprising that we'd see fees continue to be much lower than they are on Ethereum.
Cool. Well, thank you very much, Rebecca, for walking us through all this data. And, hopefully we'll chat again soon.
Yeah, sounds good. Have a nice day.